motherfucker.
All right, what's up? What's up? What's up? Alrighty, let's go. Let's see what's up today. Another day, another trade. Okay, let's see. Quick update. This is another quick update stream. Hold up. Let's see. So, looks like here we got this new levels here. We got about 6,800 something up here. All right. So that matches up with where we were expecting it to go with the JP Morgan callers. All right. So that's the expected moves. All right. And so today we had a nice drop. Thank you, Donald Trump. You sold your shorts from yesterday if you shorted, and then you bought back and you went back long. So this is the short from semiconductors just because it tagged that yellow area. I talked about it yesterday. Then I went into gold. I said, like, well, nothing to do now, but I'm done early today, right at the open. So let's see, what other trade should I make? So I saw gold. Okay, just throw some of that into gold. And I got 5%. I got out. So within 30 minutes, I got $500, right? 500 something. All right. See, good day's work. So honestly, you don't have to do much, right? You just get a little 10% here, 5% there. That's cool. Sometimes I'll get 15, sometimes I get 20 if I hold it over 2 days or it does an extra pump. I don't know. It's like this is what happens when you get a volatile market like this. You don't stick around. You just go in, you get out. Go in, get out. Because it's noisy. It's hard to trade noise. The volatility is very high. Anybody thinking about doing some long-term shit, it doesn't matter. Yeah, that's right. See, I'm not lying. All my computers that I don't give a shit about have get high, get crack for me, give crack to me. So I'm not joking around when I say, like, yeah, you think I make these usernames for a reason? Yeah. Actually, my university, when I was in university, my username was Get High too. So they gave you an official one, which was based on your last name and three letters that you pick in the front. But somehow my department allowed you to make a username when you log into the Linux machine. So my username was Get High. So all my folders were Get High. So every time the professor was like, what the fuck? You think I give a fuck, man? I don't give a flying fuck, man, what my username is. It makes it easy for me to remember. Holy shit. Anyhow, yeah. So that's easy. That's easy, right? I think I don't think anything you have to do should be complicated in this environment. I'm waiting for the final drop, and then we can do the boomer portfolio. Finally, we can do the boomer portfolio and buy some stocks and wait for 2 quarters or 3 quarters. So I can't tell you to buy anything that will last 2-3 quarters right now. There's too much noise. Either we pump and break out somehow, or we just completely collapse and drop. And if we do pump, you remember the JP Morgan caller limits us to about 6,800 something. We're not going to 7,000 in the next 3 months. So keep that in mind. Okay. All right. Let's look at the charts. Yawn. Boring. I don't give a shit if it's boring. If it keeps me away from being a wage slave, then I shall do it. Okay. So let's look at GDX. So we said yesterday that if it goes to the bottom of this pink zone, you probably could buy, right? Because that's a good area. And you can see, like, on the 78-minute chart. So I like to use 78-minute, 15-minute, 3-minute. And it's all divisible by 5. So everything I do is divisible by 5. You go from the day, how long does it open during the day? Okay, you divide that many hours by 5, so you get 5 candles. I get 5 candles per day. That's why I don't use hourly chart. And if you use the hourly chart, I mentioned this before, it depends on what charting tool you're using. If you use Think or Swim, stock charts, Think, Trading View, any other instrument to watch charts, it's hard for you to figure out what exactly is an hour when it's not divisible by 1 hour, because remember, the stock market opens at 9:30, right? 9:30 Eastern and closes at 4 p.m. Eastern. So you have a 30-minute there. And how do you count the hour? Do you count the hour where you go 9:30 to 10:30 and then count from there, or do you just do the first 30 minutes and then count from there? Each charting tool does it differently. So to avoid that issue, and also because I like 5 candles anyway, everything should be divisible by 5 because of fractal reasons. If I'm looking at 5 trading days per week on average, so then I divide by 5, right? So everything should be 5. Although you could say like a month is 4 weeks, but 4 weeks plus some days, right? And so I guess that's divisible by 5. So if you're doing by 5 anyway, you might as well say like keep it consistent and just have 5 candles all the time. Okay, so that's the reason. But in any case, yeah, most of the trade was done within the hour. There's nothing there to do. There's nothing there to do anymore. I don't know if gold is going to continue up. It could. This is a good signal, honestly. It's very strong. It was the strongest out of everything I was looking at during the first 15, 30 minutes. If you look at SOXX, also very strong. So you would be thinking like, well, would I short it if it tagged that yellow area? I don't know anymore. The first move up, sure, because it's the first initial pump, and then it does a retest, right? So this is why I talk about waves. Everything moves in a wave. You can let me draw this. So you could, let's see, is this the right way to do this? You see that? Okay, usually there's a wave, and I use this Elliott wave tool because I don't know why I didn't need to, but all right, I'll use this. And this is kind of like, they call them Elliott waves. They have the 5 waves. I kind of keep alluding to it. I don't like talking about it because I think it's BS. A lot of people do Elliott wave theory and all that, but it's very subjective. It's like looking at the clouds. What exactly is the A? What exactly is the B? What is the C? What is the 1, 2, 3, 4, 5? A, B, C. So that's Elliott wave theory. It's 1, 2, 3, 4, 5, and then A, B, C going down. It's 1, 2, 3, 4, 5 up, and then A, B, C going down. Or if you go down, it's 1, 2, 3, 4, 5 down, A, B, C going up when it turns around. That's the theory. They keep claiming that like markets all work in this principle. Generally, I don't go that far, but ABC, usually there's an A, B, C, A, B, C. There's always some kind of wave that looks like that. This could be the B, right? This could be the B, and it's not a good idea to short anymore. It's going to turn around and try to get right into that yellow zone with some force, the next move up. If this is a true B, of course, it might not. It might be that we end the day back down here, and then on Monday we open because Friday is closed. We got 3 days. Anything could happen on those 3 days. We could just fall and collapse and go right through these 2 dashed lines and go right to purple. You want to bet on that? You want to bet on that? I don't know. I don't know if you want to bet on that. You could, but I won't. I think I just go for the easy pickings, low-hanging fruit. This is low-hanging fruit. People shorting here, like I said, Sunday night, I said, watch out. There's a lot of idiots trying to short now. And then we went from Friday to Monday, and everybody was bearish. Guess what? Once we got into yesterday, everybody turned bullish. That was wrong. Now what's going on here? Are we bullish or are we bearish? Ahead of 3 days after Trump. I'm not going to bet on that. I think the easy money's made. But for gold, I like it a lot better. This thing made a durable bottom here, right? It took about like 1, 2, 3, 4, 5, 6 days. 6 days to make this bottom. So it looks like there's a lot of strength. You can see the volume in here, right here. Okay. So these two bars here had a lot of volume on the gold miners. So that's a very good signal. And then it stayed above it, right? It was working its way up. And then the last 2 days, pump, pump, pump. And then now it's doing a retest. I think there's a good chance it will just break right through into this pink area, go right to the top of it. And if it has enough momentum next week, we might actually tag 112. And you'll be like, what the fuck? Gold is going up here. And then everybody's gonna be chasing it up here. All the morons are gonna be chasing up here. All the morons that bought here, sold here, will chase up here again. And then we could decide if we want to short it. Okay, again, because I don't think this is the place to be thinking about shorting it anymore. It's over. I think this is a complete confirmation that everybody that was buying here are very confident that we are going to go a lot higher. And if you look at Japanese 10-year bond yields, look at that. It's going up after all the oil pumping. So, yeah, I think right now we're going to watch the yen, see what the Japanese do with their yen. I don't know if that's a good thing or bad thing for the gold. But if you look at Samantha, she was saying that when you do the carry trade unwind, people were not selling out. They were not unwinding their yen positions and going into selling away their stocks. They were running into gold. So that's. I think this is a different picture than what happened last week. Last week, the gold miners were really worried about U.S. bond yields, right? This thing here, U.S. bond yields. But now with the Japanese yields perking up, it's now following the Japanese more than the U.S. So this is why it's so complex to trade gold and silver. People who trade gold and silver are generally that you see online are generally idiots. They keep having conspiracy theories and all of that, but it's quite simple. You follow bonds. The competition with gold and silver are bonds because gold and silver doesn't pay you an interest. When you buy a Japanese bond, right, you get an interest. You buy a U.S. bond, you get interest. So usually gold is in competition with U.S. Bonds. That's really what's happening here. And the U.S. bonds are really not acting up as they should, because you would think like, oh, U.S. And U.K. oil prices are moving up here, Brent oil and WTI oil. You would think like U.S. bond prices would be shooting up because the Federal Reserve, they would assume, would be trying to stop inflation because this is way too high now. Way too high. We're going back up to 120 on WTI US oil and 107 on Brent International UK oil. And I don't get it. And I don't think I should get it. Who cares? Don't need to think too far ahead. The Japanese bond yields are going up. It follows gold, tracks that. It's going up. So the yen is all that matters. So we'll just have to see how the yen goes forward here. I don't know if the Japanese are going to try to kill this guy. And then I don't know how it's going to affect the 10-year Japanese government bonds, but whatever. All right. What's up, 12th man? What's up? All right, guys. That's it. But as far as semiconductors, I don't know. I don't. Even if it does go higher, I kind of have a feeling it's not worth it. You know, if you really think the NASDAQ is going to go up more, then it's really going to be what I said on Sunday. I said get AIBU and WebL because software is the place that got beat up the most. Semiconductors was the place that people kept running into. So let's look at this. So this is semiconductors, right? So let me zoom out a little bit here. Okay. So you can see we've been stuck here for quite a while. So this area here was because of NVIDIA. NVIDIA slammed everything down. So it said the market wanted to go up. NVIDIA earnings came out. Nope, sorry, go back down, go back into the range of SOXX between 353 and 326. And then once we got the Iran war starting, we went down to the lower half of this range and stayed below this red line. This red line is the point of control. So if you go back some streams ago, I talked about volume profiling and the way you would use tape reading or something like that. Auction market theory, I believe what I was talking about, auction market theory. And they would use this way of looking at it. So you would do a probability. So this is like a bell curve here. Okay. Do you guys know bell curve? That's what CT keeps calling people toasters and all that. That's why I did my thumbnail the way it was. So yeah, you're toasters, right? Are you a toaster? Are you a toaster? So who are the toasters? Who are the toasters? What do they care about? Porn, game theory, successful black people, and then interestingly enough, he put this as a choice. The Chicago Board of Options Exchange Volatility Index. How many toasters give a shit about options? Now, the funny thing is, like, if you're really caring about options, would you actually watch the Chaotic Truth show? Like that in itself is interesting. I don't know. I don't know. Would you care about the Chaotic Truth show even if you were not a toaster and you did care about the CBOE index? Would you even care about watching such a show? I think maybe it's too lowbrow, right? I don't know. Like, where are you at in the whole matrix of things? Where are you in this bell curve? So, are you the JPs? Those are on the left right here. So this is the people that says, "Oh, you're a wage cuck? Haha, sucker. I'm just getting welfare." And then you're in the middle here, right? You're the normie. The guy working at McDonald's, bagging fries. You're over here, okay? Or are you on the right? So you are the elites, or maybe the elite orbiters, like Jeffrey Epstein. I don't know. I don't know where you want to be, but yeah. Do these people watch the Chaotic Truth show? I don't know. Are they the toasters? I don't know. You could be. You could be. You could be a weirdo. You could still watch lowbrow stuff. I knew smart people that watched trash TV, like really smart people, like 150 IQ types. Like they would go home and they would like to relax and turn off their brain and watch Pokemon and reality shows. So I have no clue. You are an outlier, and you're an outlier. So you might be one of those people that watch Chaotic Truths, but yeah, I can't say. I can't say. I think people want to watch whatever they want to watch. But on this show, you don't want to be the crowd, okay? You don't want to be the crowd. That's all I got to say about these things. Because if you're the crowd, you're the moron. You're not making any money trading because you just follow the news or something. And that's too late. The news already came out. You should have been here shorting. You got out. And then you went long. And then you got out again. That's it. I think for semiconductors, looking at this, um, I don't think it's worthwhile. I just don't think so. You look at this. Let's see. Look at the bars with the most volume, right? You got one here. This was because of Iran. You got one here. I guess somehow on Wednesday, very strong bar here. Even though this closing bar was very small in terms of price, it was very large in terms of volume. And you could see like we keep getting magnetized towards it. You see, when we went below, we went right back towards it. We went below, we went back right towards it yesterday again. Every time it tries to magnetize to this level. So here and here. And then if we look down here, the next significant level was here because this was a lot of volume. at the bottom of this bell curve. So most of the bell curve, so if you think of this standard deviation going up and down from this red line, I mean, this is not really a bell curve, but let's just imagine it is truly a bell curve. Then it went down to this standard deviation here, and then we went below it, right? Maybe this is 2 standard deviations down, and then you got a lot of volume coming in here and here, and then now you're pushing up, and then you got a lot of volume yesterday or 2 days ago at this close, again, at the first standard deviation. Then you move up here to the mean, and then we went back down to this first standard deviation when we opened today. So some reason we just keep getting click, 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 click. We keep like getting magnetized back and forth between these two lines, this red and blue one, red and blue one, red and blue one. And if you just look at my chart for just simple charting, this doesn't take into account any volume. All I did was like look at the last major high. Last major high was October in semiconductors. Then we went down. This was because of earnings from Apple, Google, Microsoft, whatever. And then the final coup de grace was NVIDIA. It pumped, and then we went down to the blue. Then we went back up the next day to the red. Okay, magnetized again. Then we started going towards the purple until Oracle's earnings killed it. And then we had Micron, and then we started going off of memory. So a lot of the memory stocks finally pushed semiconductors up to the next area in January. Okay, that's basically the story here. And ever since then, up, down, up, down, up, down. We just can't get out of here. Okay, so the main phase of this was the bull market from April, right? April, May. Push, 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 push. So in general, it was like go up, go sideways a little bit over the summer, then keep going up into fall. Then we got into disturbance here, caused by the last bit of earnings from the previous quarter. And then we got up here because of memory, and optical and all that stuff, optoelectronics, lasers, data centers that use those two things that help push it up. But if you look at NVIDIA itself, it went nowhere. NVIDIA went sideways for so long, I think since probably August. So let's look at NVIDIA. Yeah, since August, you see? It's pretty much sideways, right? You had this little pump here into October, but in general, it went back down. It mean reverted. It went back to the mean. So this red line is kind of like the average where it's hiding out. And we kind of keep touching this cyan level. You see, we keep touching it again. I think the next go around, maybe we try to get back to 183, but then that'll be the last time probably. If there's no real good reason it should go back above 180, then it's just going back down to 160, whatever, 165, 167. And then from there, we're just going to collapse and keep going lower. So the next point would be lower probably. This is your last chance to push this a lot higher. So if earnings doesn't help, and NVIDIA reports earnings very late, so it'll be around May. There could be a lot of Iran crap coming through in April before it even gets to that point. And you'll have all the other earnings too that'll get reported first. Yeah, if it doesn't get through it, yeah, there's a good likelihood that this whole thing from August is just a topping structure. And eventually this will just result in a big drop down to 140. Yeah, that's it. Okay. So that's how you look at things. Very simple, nothing complex I'm doing here. Yeah, that's it. But if you look at like software has already been beaten up. It's been beaten up like what, 50% already? There's a better chance for me to hide out in software than yeah, 33%. That's like a bear market, bro. That's like a really big bear market for software. So let's say the NASDAQ pukes. I think the thing that you would assume is that when the NASDAQ goes down this time around, it's because semiconductors finally gives up and can't hold its liquor and finally goes farther and farther away from this bottom blue level at 326. Okay. That's it. We're going to go back down here because this is the last point of support at 326. And if it can't hold it, it's going to go to 307 pretty rapidly. And if we get a big crash on the NASDAQ, there's high volatility and punches it, it'll go right through like hot knife on butter and go straight to 268. If that happens, then NVIDIA definitely, yeah, we'll just follow it and go down because this looks like a top two. Okay. While if you look at software looks like it's retested its bottom. It looks like it's trying to make a bottom, I think. Unless this is a fake out. It could be. It could be that we get up to 87 here on IGV and then completely fail and roll right back down. And so it has to build enough energy to go back down, I think. I don't think there's enough of a reason for it just to roll over right from the bottom. Okay? I think there's way too many buyers here at this point. You look at the volume. Look at the volume here. Huge. Compare it to all the volume in the past. Somebody probably is buying here. I don't think all these people are just morons. There's just tons of volume as it hangs out in this range. So there's more of a chance that this is a bottom and it's not going to go much lower. If it does go a bit lower, then that's a real good buying opportunity. I would just be loading the boat on all sorts of risky cloud computing stocks, okay? And cybersecurity, anything that looks like that. And I would just load them up like CrowdStrike, Palo Alto Networks, some other ones that we've talked about. And so I'm going to be looking at which one of these would be the best bang for your buck. And there's a whole bunch of other ones too. Nutanix, Pure Storage, CoreWeave, yeah, Mondo, DB. Yeah, there's tons of them right here. Yeah, so we could be getting a good opportunity to buy. Can we look at Nike? Nike. Shoes. I mean, we're going into a recession. I don't think I mean, I do know some clothes manufacturing stocks are really good. Shit. Damn. Huh. Oh man. It's already at a downtrend. Huh. I have to look at the sector it's in. Let's see. Under Armour. Is that a direct competitor? How does Under Armour compare to Nike? If Nike's not doing as good as its competitors, huh? Yeah, I'll have to look at its competitors too, because this is not good. This has been going down since fucking the end of COVID. So who's eating Nike's lunch, right? Adidas. Is Adidas like on the market, or do I have to go to the European market to find it? Adidas. Shoot. They probably only list in the European market. God damn it. Man. Motherfucker. All right. So I guess I have to buy over-the-counter Adidas shares. Okay, I can use this. ADDDF. Uh-huh. Looks like this. Yeah, so footwear, I guess, is not going well. But I think other apparel is probably okay. I don't know. I have to look at the other ones. I have to look at all their. So when you look at a stock like that, you're gonna have to look at their peers, right? Look at other clothing manufacturers, footwear manufacturers. Like look at Goose, right? Canada Goose. I used to trade this sucker. So in 2018, it was a really nice stock. You see that? 18 to 70, and then it started puking because Goose is very dependent on Chinese buying. Goose is very popular in Canada and China because there's a lot of Chinese in Canada, and then they tell people in the mainland in China to buy it because it's fashionable. It's mostly for the damn little label on there. For some reason, the Chinese love that stupid little logo. And so that's why I got this initial pump. But from that point on, nothing, right? Nothing, because a lot of competitors moved into the market to make similar clothes like Uniqlo or any other. The Japanese Uniqlo probably would kill this guy pretty easily. I'll say Uniqlo. Does this even have a stock? Fuck. Uniqlo. Does it have a stock? Oh my. So it's part of Fast Retailing? What? So they own the brand? It's the primary subsidiary. All right, let's see what that stock looks like. FRCOY. Oh, look at that. Uniqlo's going it up. Oh, I wonder why Uniqlo's going up. So there you go. See, there's a reason a stock is going down. It's either because the whole group is going down or because somebody's eating their lunch. Somebody's eating Nike's lunch, right? Because I don't think every footwear company is going down. All right. So it's a highly competitive area. People are very fickle. So this is watch this stuff. I don't touch this stuff. It's really ugh. I mean, but chart wise, this is a lot better. You see that? FRCOY. There you go. There you go. That's it. That's who's killing a Canada Goose. Okay. And then you'll just find the companies that are killing Adidas and Nike, and then that's how you'll get the thing. There you go. FRCOY. So that's Uniqlo. And yeah, I mean, Lulu, I don't think Lulu has been doing anything better. Yeah, see, Lulu's like, yeah, it already broke this cyan level. I saw that last year, and I said, like, it's dead. It's dead. Yeah, I know it's right back to COVID levels. You would think you would buy it. If you buy it, it's only because you think it will just revert back to the, I mean, not purple, but cyan, and then it'll just crash again later when the recession's around the corner. It's next year. So I don't see any benefit of trying to play these names unless you just want to do mean reversion trading. Like you just want to go like, oh, okay, well, it's oversold. It'll just mean revert here before crashing later, right? Yeah, that's the only reason you would buy this. But, there's no other reason, not for long term. This thing can go a lot lower later. So yeah, Nike would be the same thing. Let's see. It will probably just mean revert, I guess, around here. So this last top in 2015, COVID touched it. It's been dancing around it. It goes back down. So it'll mean revert to 66, and then it'll go back down. So maybe if the stock market gets happy again, we get a nice little flush out of the stock market in the coming 2-3 weeks, sometime down the line, once we invade Iran completely, and then then we can go back up. All right, that's it. That's all you gotta see. What's up, Quantum? What's up? Okay, so I think that's all I gotta show today for the charts. That's 35 minutes. What we gotta do now? Let's see. Let's talk about Warren Buffett. So that's the title. Let's go. So Warren Buffett is still in cash, and let's see what he says. Let's see. I got 2 clips from him. 2 clips. CNBC commentator said we might be at the bottom. That means we're not at the bottom. If CNBC says it, we're not at the bottom. Oh, God damn it. Anytime CNBC says something, you do the opposite. Never trust CNBC. Holy shit. Okay.
Talk about that. The market has come down substantially.
Not substantially.
Well, you've got both the Dow and the NASDAQ in correction territory. It's the worst performance on a quarterly basis for stocks in about 4 years. Do things look cheaper to you?
No. 3 times since I've taken over Berkshire, it's gone down more than 50%. I mean, if you look at the markets of Oh, the worst probably was the 2007-8 period, although there was that one Monday when you had 21% in a day. I mean, this is nothing. I mean,
Well, this is nothing to make you get excited and think there's huge valuation
well,
drops.
if they're 5 or 6% cheaper, that doesn't. We aren't in it to make 5 or 6%. I mean, but.
Well, Buffett ain't buying. So what's about that, huh?
Rates low for too long. I mean, I think that's as they didn't worry about inflation as they said it was going to be transitory. Because I think even Powell himself has said that he might wish he'd turned it sooner.
Well, I wish they had a zero inflation target.
Right.
But I mean, once you start saying you're going to tolerate 2%, that compounds pretty dramatically over time, and you're saying to people, if you're getting less than 2% on your money, you're going backwards. And actually, if you pay tax, you may pay tax on the 2%. You know, I mean, I don't like that particular goal. But
So,
Okay, I think with that second clip, it's time to discuss a few things, and then I'll wrap it up. Okay. So let me give you something here. First, he said he doesn't think it's worth the value. So let's look at one way to value the S&P 500. It's the Shiller PE ratio. All right. So the Shiller PE, the highest ever got was around the .com. So it was at 43 price to earnings ratio. Shiller, and the Shiller modification is, I think, with inflation taken into account or something like that. Right now we are at as of March was 37.91. So we are back at the .com levels. We've been teasing this area for a long time because it was right before the bear market of 2022 that we got this high. Okay, at 37.91. So we've been teasing it. I think the next run around, if we do get to this 40 something level, that's definitely going to be a red flag right there. And what's the other thing you want to look at? So I was talking about, like, you got to compare these things with bonds, right? If you look at Nvidia, how much of the dividend does Nvidia give you? 1 penny. 1 penny every quarter. So per share. So that's 4 pennies per year. Okay, that's very, very low. Let's look at the whole S&P 500. What's the dividend on it? It's 1.2% right now. What is a T-bill? A T-bill gives you, so basically a bond that lasts 1 year, 1 month to 1 year, 1 month, 3 month, 6 month, 1 year. That gives you about 4.5 plus % right now for a T-bill. So holding cash is not 0% interest. Most people that will hold cash really mean that they're holding T-bills, short-term bonds from the U.S. Treasury. They get a free 4.5 APR off of it, okay? So you take that 4.5, divide by 12, you can figure out how much you get per month. Okay, that's how you would do it. And then compare that with a 1.2% for the whole year. Okay, so you are competing with something right now. And the stock market is not risk-free. Cash is risk-free, technically, unless you think the dollar is going to devalue into oblivion and the U.S. will collapse. And then if that's the case, then you'd rather be in gold. Okay, so that's what you're competing. That's why Buffett says what he says. You've heard him. Even though he doesn't like inflation target at 2%, it benefits him anyhow, because by having the inflation so high, it keeps the Federal Reserve like leaving their interest rate at a high level. So he doesn't care either way, honestly, because he's not one of you schmucks at the bottom. Even though he might say like, yeah, he doesn't like what they're doing, it's like he doesn't care what they're doing because he adapts to the situation. That's really what it's going to be. So, okay, so let's let me give you another indicator. How about this? How about this one? So this is the Buffett indicator. Okay, so this is the total U.S. stock market value over the gross domestic product. So this is Buffett, the Buffett indicator. And right now we are way overvalued. We are above 2 standard deviations from the average or mean or whatever this is, trend line. So the stock market from this indicator is way, way more overvalued than it was in the dot-com bubble. So that's another reason why Buffett doesn't want to buy. It's like you got to give him a deeper discount. He only goes for the very good discounts. This dip will not attract him. April's dip will not attract him. COVID, even the COVID dip, okay, that looks more attractive, but still, it's not as attractive as it could be. So he's holding his powder fresh because he still gets 4.5%, right? So yeah, Palantir definitely contributes to that. Yes, Palantir. So yeah, that's how it goes. Now, let's look at another thing. Let's look at another thing here. Let's look at this. This is another valuation thing. So I'm just quickly going over through this. You can get the links in the description. You can look at the explanations and all that yourself. But I've talked about this before, so I'll probably talk about it again sometime down the road. Okay, so let's get this going. Okay, market in wartime. So this is the Brock value. So we got this Brock value. Let's see. I believe this one they take into account the competition with bonds. I think that's how they come up to it. Let's see. Okay, yeah. Brock value is the first clear answer to the question, what is the market worth? So the Brock value is a valuation metric with just 2 inputs, GDP. So the same thing as the Buffett, we also use GDP. But this one also takes into account interest rates. But compared to questionable old school metrics and even popular ones like Shiller Cape. So we already covered the Shiller. Remember this one? The Brock value provides useful measurements which can be used to over or underweight equities in an asset mix. So I guess this is an improvement on that. But we've been overvalued on this metric since 2022. This is way overvalued. So if you just do fundamental valuations, you missed out on huge gains because the money printer went brrr, right? That's the Federal Reserve right there in action. This is why it goes up, because it's liquidity. Also, the Japanese, right? The Japanese central bank. So a lot of this motion is because of the central bank. You can fight against it. You could yell and scream that everything's overpriced, but it doesn't matter. It still goes up because there's a money printer pushing things along. It's liquidity that matters. Liquidity is what matters. Okay, so let's go into this one. How about this? This last one I'll talk about. Okay, so there was this article here. I think this is a very good one from last year, I think. Yeah, this was last year from the CBOE or the CME or one of those Chicago exchanges. They made this one. Okay. Man, the archive website is getting slower and slower each time there's an attack from Iran. Oh my God. I don't know why these guys have so many servers in Israel. Bro, getting so tired of this shit. Maybe I can just get the main website. How about that? Okay, let's see. Do I have the original link? Yeah, I do. Okay, let me just go to the original link. Okay, so behind the declining risk premiums of equity and credit assets. The risk premium investors demand for taking positions in equity and credit markets compared to a safe haven asset like U.S. Treasuries. So we talked about those T-bills. There's also bonds and notes. Has narrowed sharply, with 10-year Treasuries yielding 4.25% as of early July, raising their competitiveness with stocks and credit markets. Equity and credit risk premiums typically measure their returns against 10-year Treasury notes, which have remained steady as the Federal Reserve paused its monetary easing after cutting rates in December 2024 amid sticky inflation. Equities, on the other hand, have been surging since late 2022, narrowing the equity risk premium, ERP, with Treasuries. So again, that 2022 area where we saw this Brock value say, yo, you're overvalued, you're overvalued, you're overvalued. Doesn't matter, pump, pump, pump. While there are various tenors of U.S. government fixed income securities that could be used as the risk-free rate, we solely focus on the 10-year Treasury note, given its liquidity and common use as a singular risk-free rate. The size and direction of the risk premium signifies secular shifts in capital market returns and asset allocation decisions. The S&P 500 ERP is at a 5-year low, and investment grade and high yield credit risk premiums are steadily declining. So that's the corporate bonds. Corporate bonds are broken down into different grades based on their credit score, right? You heard about AAA, AA, A minus, whatever, AAA minus, BBB plus. So they all have credit scores, all right? You have a low credit score, you're going to get a higher yield. So if I got a bond from something that's about to go bankrupt, I'll get a higher interest for it. If I get a bond from something that's less likely to go bankrupt, like Apple, then it's investment grade. So I'll get a lower interest for it. Okay, so credit risk premiums are steadily declining from their highs in the summer of 2023. Market participants can use CME Group equity and credit futures to manage their exposure to credit changing risk premiums. So this is just an ad, I guess. So they're saying, why don't you trade futures? It will protect you from this stuff, huh? Trade futures, learn futures. Okay, so I don't know why this thing is wrong, but if you look at this chart, you see this axis, they say price, dollar per gallon. Bruh, this is interest. Why is it dollar per gallon? This is a percentage. What is this? Man, they don't even check their homework or something. Who the heck writes these articles, bro? Where did this guy graduate? Can I fire this person for making such a egregious mistake like this? Oh man, fucking morons out here. Anyhow, so we got equity risk premium. Okay, you see this going down? We're going down. We're going, so it says, look at the left side, which says it's in price per gallon, dollar per gallon. So I get $1 per gallon every time I buy a treasury bond. No, that's not correct. So it's a negative. So I get paid in a dollar per gallon. That makes no sense. All right. So anyhow, closing this chart, let's go down here. So this thing says the 5-year equity and credit risk premiums, and the for the S&P 500, we are now at a negative 0.867 as of January 2025. So over a year ago, we actually went negative. So what does a negative number even mean? So the risk premium is negative. So since early 2024, as U.S. equity markets rallied to new highs and bond yields reach attractive levels, investors have been pondering whether the shrinking ERP should be a cause for concern. Equity risk premium varies through time depending on market conditions, even dipping into negative territory at times. Historically, negative equity risk premium has been accompanied by market corrections. The correction scenario appears to be playing out in the equity markets. Year to date, the major U.S. equity indices are barely positive. For the first time since August 2002, ERP turned negative in March 2024, signaling that equity valuations are stretched and stocks may be overvalued. Furthermore, the negative ERP brings up the question of whether market participants should meaningfully shift away from their equity allocations and move into safe haven assets. Shrinking or negative S&P 500 ERP can have meaningful implications for near to future term asset allocations, with investors recalibrating returns expectations and positive returns from U.S. equities are facing headwinds. Okay, so anyhow, I think that's why you can see like people are running into Mexican stocks and Brazilian stocks and all that. What's up, Gary? So that explains why Buffett says what he says, right? If you compare U.S. stocks to bonds right now, bonds pay you pretty good interest, where you're going like, well, bonds don't have risk, stocks do. So Buffett's been raising cash all throughout last year into this year, and I don't think he's changing his mood, right? That means he's gonna wait for the big crash before he takes that into anything. He's not gonna be like very interested in Palantir dropping 5%, 10%, 20%. He's gonna be like, that shit's expensive, which it is. Palantir is very expensive. Crack, does Substack have collaborative features to discuss market stuff? Maybe a community group drop. Substack keeps adding features. I'll have to see. So they keep adding more and more features each time I see it. I don't know if they do. They definitely have a comment section, so you can always have comments on there. So you can do that as far as we can be doing. Like if you want something else, I'll have to look into it. Okay. Yeah. So months ago, where he said buy, the markets went up like crazy, but generally, yeah, good to be skeptical. Oh, you're talking about Trump or something? I don't know. Trump or Buffett? Yeah, I mean, we talk about Trump. We talk about the taco trade, but overall, you position yourself before the taco. You know what I mean? Yeah, that's how it goes. But before the April Fool's joke that Trump played, if you looked at the A-15s leaving the Air Force bases, all right. Okay, so that was like 2 days before the whole April Fool's joke. All right, so people have been watching these A-10s being moved around the world. So those were being moved out of New Hampshire, off the Pease Air Force Base, I guess the National Guard Air Base, and going into the UK, and then from the UK into the Gulf. So yeah, a lot of A-10s are being taken out from retirement and putting back into work because, well, it looks like this is the only way to fight low-tech drones, and is through low-tech 1970s era airplanes. So yeah, I know this has been a contentious issue because the Air Force has always been trying to kick these A-10s out so that people would buy more F-35s, but F-35s are essentially useless against slow-moving drones. You got drones moving. This is like Wile E. Coyote Looney Tunes type shit. You got Wile E. Coyote flying with his Acme rocket, and then you got somebody going really slow, and he just flies right past you. He can't fucking aim and shoot because you're just moving way too slow. Anyhow, I did not say I recommended or did not recommend Uniqlo or any of that. That was just because I was given the example of, like, if you give me Nike, I also would like to know how the whole sector is moving, right? Apparel, clothes, and other footwear companies, right? I have to see how their competitors are doing. Is this because Nike itself is a problem, or because the whole sector is a problem? If it's the whole sector, I don't buy it. Okay? That means nobody wants to touch anything in the apparel sector. But if somebody is going up, then, like, you see Uniqlo's doing fine compared to Canada Goose, so it must mean that somebody's making money in selling clothes and footwear. Then it's because you're not adapting your business to the actual truth. Okay, these companies have to compete with everyone else around the world. You got a lot of Temu, right? A lot of Temu junk out there. If they can make a shoe that looks almost exactly like your shoe, why would I pay 100 times more for something that I could just buy on Temu, right? Something like that. So that's why I don't like clothes. You'd rather buy companies that have very good monopolies. If you don't have a good monopoly, that's it. I know. You got Nikes, you think like Air Force Ones, Jordans, and all that. You got a monopoly. Yeah, right. It's just a piece of plastic, man. Come on. Made in a factory in Vietnam by one of my cousins or something. Anyhow, the A-10 Warthog looked like it was headed for retirement. Then the Iran war started. The A-10 Warthog has been revered for generations by grateful ground forces who credit the famous flying tank for saving them from enemy fire. And to be honest, we can't get enough of the A-10. As you can see, we visited the A-10 Warthog on display at the National Museum of the U.S. Air Force just last year. Although the future of the combat-tested aircraft has been debated for years, there is little question about its combat performance. Despite the many efforts to sunset the famous aircraft, the U.S. Air Force is once again surging the Warthog into aerial attacks on Iranian small boats in the Strait of Hormuz. So I think a lot of these A-10s are coming. I don't know. They're gonna have to. Are they gonna be there to support ground forces landing on all the little islands across the Persian Gulf? Let's see. Woo! The last time we had island warfare, it was against the Japanese in World War II, right? Island hopping. So let's see what happens now when you go on those little desert islands. The islands in the Southeast Asia at least had a jungle. You got no cover if you go on these islands. You're going to be sitting ducks. So that means you're going to need a lot of A-10s protecting them. All right. So it's going to be fun. I don't know. Yeah, it's going to be fun. So that's what we're going to wait for the stock market. We have a 3-day weekend, guys. So that's it. Okay. I'll probably be back sometime over the 3-day Easter weekend to discuss what we're going to talk about in the Substack and things of that nature, and planning where we want to buy things. I think before I go, I want to talk about aluminum, because several days ago, I think over the weekend, there was aluminum plants being attacked on the Gulf Coast, and aluminum is again surging. So we have some aluminum to look at, I think. So there'll be like several stocks. I've already talked about 1 or 2 aluminum stocks. So we might start adding more into where we want to be because now they're finally breaking out. Okay, so let's see. Okay, how's it doing for the week here? Yeah, this one's up 21%. Okay, I'll talk about the whole I mentioned before, and then we'll wrap it up there. It's already 1 hour. Okay, that's it. Okay, you see this? So it's been going sideways for the whole 3 months here, and it's not very quiet too. You see, it goes up 12%. The next week it's down for 5.6%, up 3.56, down 8.6. And then, you know, and then we start getting noisy again, up 6.6, down 11.2. And then now we're up this week at 21%. So AA Alcoa is the big one. Then you have a smaller aluminum companies like this one. Okay, same thing. Very, very noisy. And then it's up 25% this week. So this is what we're going to have to look at. I think aluminum is the next one, especially if you have a lot of war. Aluminum usually goes up. And this is kind of an indicator of war, too. So if you're getting more and more and more bullish, like we started seeing since late summer into fall. And then only recently it started going sideways. But if aluminum's pumping again, and then we're on the verge of another war, then yeah, we will see aluminum prices continue to rise into the next year. Okay. Learn some things, lessons this week. My first, yeah, you have to do it. It's not. It means nothing if you just think about it. You got to do it too, because it's all psychology. Just like doing paper trading or just like going like, oh yeah, if I bought it here and sold it here and doing theory doesn't mean anything. When you actually put your money where your mouth is and actually do it, it changes things because now you have psychology built into it. And you have to learn yourself before you know how to trade. That's why it's trading in the zone. There you go. So yeah, that's when you start moving faster and faster and faster. You know, I never back test. I just don't care. I just go. I just do it. I just make sure I see some patterns. I see a pattern. I do it. All right, I gotta go eat, guys. Delicious chicken. All right, Pam Bondi is out. What? Pam Bondi's out with what? What'd she do? Did she do something? I can't keep track of this administration, man. Who cares? It's all noise anyhow. Let me end it with this thing. How about this thing?
What's your name? Who's your daddy? Who's your daddy? Is he rich like me?
See, this is what you're fighting for, guys. Okay, you're fighting for whores. Like, what whore are you talking about? There's a whore over here. There's another whore over there. Which whore? What? Who? This is who you're fighting for.
Sean! We're going to war, soldier! Well, you are, not me. It's time to get boots on the ground!
It's Jeffrey's War. Are you a pathetic gooner looking for love?
Aren't we all? Well, we've got plenty of ladies.
And they're just waiting for liberation.
All you have to do is beat our challenge.
It's time to roll the die on your lives!
Let's see what these boys won. It's crippling PTSD and higher gas prices.
A brand new luxury casket! You answered C, and you are correct! Do you have what it takes to